there, I'm Dean Heskin, President and CEO of Swiss American Trading Corporation, and you are tuned into our podcast, The Secret War on Cash, where we take a look at some of the developments or changes that are taking place in our financial markets, in our economy, or it doesn't even have to be a development or change. It could be just what's happening. I have with me my co-host, Chris Agelastos. Chris, thank you for being here today. How are you?
I'm doing well, thank you.
Good. Sound great. Let's get right into it. We're wrapping up 2024. We are
Yeah.
literally just a small stone's throw away from the end of the year. And so, with that being said, there's a lot of news in the financial markets and about the economy that's coming out in anticipation of what we might expect to see ahead. But let's start with our first article here. Investor optimism for US stocks eclipsing the 2000s dot-com bubble raises the quote negative shock risk. And I'm going to ask you a little bit about that, but it is interesting, with the Dow doing as well as it is doing and has been doing. The kind of surprising thing about this is that it seems like there's a almost a disconnect between the reality of what's going on in our financial market, or excuse me, what's going on in our economy and what is going on in the financial market, specifically as
Yeah.
it relates or pertains to the stock market. And I say that, and we've talked about this in other podcasts where, there are uh, the reports that have come out and continue to come out about the economy, about how the consumers are strapped right now. The people are dipping into savings, all these things that, that's really ultimately what is going to fuel commerce and fuel profitability in terms of companies. And everything that we've said is suggesting that's not good right now. We've seen companies
Yeah.
close down. We've seen the issues that we've had in our banking industry, but yet again, you have the stock market that is doing extremely well. And I just find it interesting when they're saying investor optimism. I think investors are grateful it's doing well, but optimistic. What is there to be optimistic about at this point, Chris?
Yeah, well, I think, unfortunately, I think there's a lot of blind optimism with
Fair.
retail investors that don't really, um, I mean, I don't want to sound bad, but maybe don't really understand or know what they're investing in, right? They're just putting money into the market or into their retirement plans, and it's sort of on autopilot. And then you tune into the morning news. I think it was Fox Business that was on this morning, and you have multiple hedge fund managers and guys in the industry talking about how great things are and keep investing and everything's going to be okay. And then when you look at the actual figures and what's happening inside the economy as it relates to jobs and inflation and all the real real inner workings of the economy, and you see, well, things aren't so rosy. So it reminds me of the old saying, like, when everybody else is talking about how great the market is and making stock picks. And I saw somebody say the other day that they were in their Uber and their Uber driver was checking their crypto portfolio. Like, that's the time to get out of the market. so
Yeah.
so
Yeah.
all of this optimism, I'm not really sure there's a lot of meat and potatoes behind that. I think typically when there's they like they say in here, when there's overwhelming consensus that things are positive and go, everybody's putting their money in, that's when people have blinders on and maybe can't really see the legitimate problems that could be right around the corner.
Well, it's funny you might actually be right. It's funny you say that. If we look at our
Heaven
next
forbid.
article here, okay, they this by Kelly Clunan, there are
Uh,
three reasons stocks are headed for a bear market in the first half of 2025, according to this research firm.
mhm.
So as we look at it, and kind of like you were saying, the people have a kind of a blind optimism as it pertains to the stock market.
Mhm.
They list out for us here some reasons that we may be looking at a pullback. Do you think that these things they're mentioning here, do you think number one, they're a reality, and number two, they're right, it could thrust us or force us into a bear market?
Well, it certainly all makes sense. What they're sort of predicting here is that we're going to continue to see, a good run early into the year. We've got the inauguration coming up in January. We had a nice clean, I guess you could say, election. I mean, we had results within a day, and nobody was arguing or fighting it. Really, so that kind of helped boost things up this last month or so. So that we're kind of going into the new year with this upbeat attitude, but they're predicting that at some point during the first half of the year we're going to see at least a 20% drop in the market, and they highlight those points. Slowing consumer momentum, right? Less spending. One of the things they look at here is Home Depot's and Lowe's purchases. Slowing purchases, even though home values have gone up and people have more equity in their home. But they're not tapping that equity, because of concerns, maybe what's going on with the companies that they work at, with their jobs or their friends and families' jobs, inflation. They see their bills are going up, so even though they have more equity, they're scared to spend some of that money. So that's going to affect the economy, the labor market. Even though we did have some more job openings available, the rates of people quitting and jobs not being filled have hit a 4-year low. So that's an
Sure.
obvious concern. If people aren't working and making money, bringing paychecks home, that's going to affect things. And then sort of like we talked about with the market, the historically high stock market evaluation. So we know there's some degree of a bubble. How big it is, exactly when it's going to pop, we don't know, but they're predicting here, within the first 6 months of the year, and they're really just saying, you know, um, get yourself in a defensive position, hedge risk, protect yourself, and then get yourself, rotate yourself kind of out of the stock market so you're not taking those risks right now. Getting out right now, you're likely selling at a high, getting out at a good point. And then wait for the market to drop 20, 30% and get back in and buy in at a value. Of
Sure.
course, we know people tend to be a little greedy and they have a hard time getting out because they don't want to miss out on another 5%. But if you've already made 30, 40, 50, take those profits and maybe sit on the sideline a little bit is what I would say. And I think that's why people have been, moving into the metals market too. It's obviously considered a safe haven and a good place to protect your money when you have all this kind of volatility or potential volatility right down the road.
Sure. Well, I'm glad you bring that up. So why don't you, I know that we've talked about before, but you have an offer for introductory offer for, excuse me, for Walking Liberty silver half dollars. So tell us a little more about what people can do to find out more about that offer and take advantage of it.
Yeah, definitely. Especially if you're new to gold and silver, and maybe you haven't done much with it before, and you want to kind of dip your toes into the water, as they say. This is a great offer. We have no minimum purchase amount on it. They're $13.50, which is a phenomenal deal. All you need to do is call us at 800-289-2646, or go to the website and enter your information. There's a little note field there. You can tell us you're looking for the silver offer or anything like that, and we'll reach out to you, explain how it works. But essentially, I mean, you can even just buy one or two of them to see if we're the real deal, and get them shipped off to you. Or you can buy up to 250 at, again, a phenomenal deal.
Okay, fantastic. And if you need that phone number for those tuning in, you can find it in the phone number or the web address. You can find that in the description of the podcast program here. So thank
Yep.
you for tuning in. Chris, thank you for all that information. If you're not
Mhm.
subscribed to this podcast, please do so and follow us on social media as well, as we'd love to stay in contact with you. Thanks for all the info again, Chris, and have a great rest of your day.
Thanks. Take care.